Hi, I'm Jimmy. In this video, we're continuing our three-part series where we're trying to find different types of stocks for long-term investors going into 2023. In the last video, we did our top 5 value stocks. This one, we got our top 5 dividend stocks. And then the next video, we got top 5 growth stocks. So we're trying to find stocks that could be good long-term buy and holds. That's the thing for us to remember. And hopefully they're trading at a decent price or close to a good price. But before we jump into that, let me tell you real quick about an investing platform that we're building. So we've got our private investing community hosted over on Discord. On Discord, we got a whole bunch of different investing channels where we all talk, share ideas, do some research projects together, and ultimately try to get better as a community at investing. We also do a couple investing live streams, private investing live streams every week. Some we do a valuation live stream, we do a portfolio live stream where we talk about my portfolio, we build the different portfolios. Plus we do a research live stream where we try to analyze companies together and go through the process together so we could all get better at it. Okay, now let me tell you about the website that we're building. So we already built the beta version of our discounted cash flow calculator. And the idea is that we would have a website that has a bunch of different valuation methods. So it could be, how do you value banks? How do you value a large cap company? How do you value a real estate company? How do you value a company with no growth or negative free cash flow or negative profits? There's different ways to value all different types of companies. So that's where the website's trying to go. For now, we've already got the beta version of the DCF calculator up there. We're just going to keep adding from there. Now, if you'd like to sign up to get access to our investing community as well as the website, I will leave a link in the description below. Okay, for now, let's jump into our first dividend stock, and that's Best Buy, ticker symbol BBY. So you can see we got a fair value of $110 per share. It's trading at about $80 per share, and it's got a decent dividend of a bit over 4%. This is actually one of the lowest dividends on our list today. We go as high as almost 10% in one of the stocks, but Best Buy looks like both a value opportunity and it pays a decent dividend. So this was actually a company that I thought would struggle a lot more with Amazon. They did struggle, but I thought they had a potential of going out of business. And they seem to have sorted out how they're going to compete against Amazon. We can see that analyst estimates have their free cash flow growing over the next few years, hence the reason the stock looks like it could be undervalued. So Best Buy is an interesting one. Okay, now let's jump over to our next dividend stock, and that is Hasbro. Ticker symbol HAS. So we can see Hasbro has a fair value of $70 per share. They got a current price of about $57 per share, and they have a dividend yield of just under 5%. Now, overall, their dividend has been fairly reliable. They've been able to increase it on an annual basis. And again, we can see that analysts have estimates for free cash flow gradually increasing over the coming years. So if that does play out that way, this is another one of those that you get a decent dividend yield, and you could be buying at a good value, which could be really good for long-term investors. Okay, now our next dividend stock is a mining company in Rio Tinto, ticker symbol RIO. So Rio Tinto actually is a London company that trades in London and trades in the US. And we can see that we're getting a fair value of about $78 per share. The stock's at about 70. And impressively, the dividend yield is up near 10%. Now, there's an important thing to consider with their dividends. While they have a very good dividend yield, their dividends, unlike all the other companies on this list, are much more variable. First of all, they only pay a dividend twice a year, semi-annually. And one of them is a special dividend. So based on the profits that they make is what they pay out, which is why you can end up with a dividend yield as high as it is, because it's a bit more volatile than most of the companies. It's not quite as predictable as many of the other companies. But if we're after dividends, this could be a real interesting one to look at. Okay, next up, we've got a company that I've actually talked about in the past, and that's LyondellBasell, ticker symbol LYB. Now, LyondellBasell has a dividend of a bit over 5%, which is decent. They got a fair value of about $128 per share. Currently, they're trading in the $80 range. So overall, things are looking fairly good. Now, this is a company that makes, they have like refining business. They turn that into a lot of polypropylene. Polypropylene is plastics, essentially. So they have a business that is likely to grow, likely to be around for a long time. When we look at analyst estimates, we can see that analyst estimates have them gradually growing. This, from the research I've done in the past, has been a fairly reliable company. The fact that we got a dividend over 5% makes it look interesting. This could be worth researching and a good long-term buy and hold stock. Okay, up next, we have another stock that pays about a 5% dividend yield, and that is International Paper, ticker symbol IP. So International Paper, we have priced out the fair value at about $40 per share, currently priced at about $30, $34 per share. So overall, it looks like it could be a decent value. Now, one of the problems with this particular company, one of the hesitations around it, is that growth in recent years has been somewhat limited. Analysts are expecting a pullback next year for free cash flow and then for growth to pick up again. So if we are looking at some exposure to the paper industry, which I could imagine, this company makes a lot of packages, things like that. I could imagine a world 10 years from now where there's going to be a lot more boxes, a lot more shipping than there are today. So I see the long-term opportunity for a company like International Paper. I just want to make sure that their dividend's going to be reliable. So if we are researching this one, to consider adding this to our long-term investment dividend portfolio, I think that would be the thing I question the most. I would question, are they going to be able to grow and finally turn around the growth problems that they've had in recent years? If they do, this could be a great dividend stock. Now, if you'd like to sign up to get access to this website and to join the investment community we mentioned before, I will leave a link in the description below. I also have a link in the description below to the 5 value stocks video that we recently did. And up next, we got the growth ones. Thank you, and I'll see you in the next video.